Learning Unit 8 deals with salaries and wages. We typically discuss salaries more as a concept because majority of the things that we do also applies to wages. So just know that when we speak salaries, we actually also mean wages. You have to know the difference between salaries and wages being paid once a week and salaries being paid at the end of every month. Okay, so the reason for doing this learning unit in your Accounting 1A textbook is because salaries and wages form quite an important and large, I want to say, monetary part of your accounting systems every month. If we have employees, paying them their salaries is quite a process. So it's important to understand what goes into that process and how salaries and wages are dealt with in a business. Okay, so certain important facts, more theory related about salaries and wages. So you can go look on page 224, just more for interest sake, I would say, to take a look at some of the factors that determine remuneration. So remuneration is also just a formal term for salary. So if you see that term, don't get confused, it just literally refers to salary. There are various factors that make you basically earn what you will earn one day. So for you still being a student, looking at potentially working after you've graduated, it might be interesting for you to see why not everyone that maybe has a qualification or started working would earn exactly the same amount. Okay, so you can look at those factors. Then over and above that, on page 227, quite an important theory part, more for being able to understand it practically. So we don't necessarily always test you on what is medical aid, what is a provident fund. But when you see the terms coming up in your practical work, when you're doing the journal entries and the T accounts, it is very important that you can work with these terms. Okay, so we've got a basic salary or wage, which is normally your basic contracted amount that you would be contracted for every, what you get paid every month, or what you get paid every hour if you're a wage earner. Then you get an overtime principle. So if you're working over and above your set hours per month or per hour, in most cases we work with wages on this. So in most cases then you would earn a rate higher than your normal hourly rate. That's typically applied to working on Sundays or public holidays. So if you normally earn 100 Rand an hour, you might be earning 150 Rand an hour if you're working overtime or on days that overtime is charged. Then you get something called a yearly bonus. So if you do get that, mostly for salary earners, you get a bonus maybe in December or your birthday month over and above your normal salary. Then pension funds and provident funds, I'm going to deal with together. What you basically need to know about them is that they are funds created for us as employees to contribute to while we are working, so that one day when we are retired, typically 60, 65 years, you have money in those funds available that is supposed to sustain you until the day you die. So that's the whole reasoning behind pension and provident funds. They function a bit differently in reality. You can read in your textbook over that. But the basic idea is that you put money away in these funds and you are able to access the money once when you retire. These funds are typically managed, I want to say, or at least the accounting part of it is managed by your employer. So that means that you join a pension or provident fund, and some of your salary every month your employer will deduct, and they will send it to the pension or provident fund. That will then manage it for you on your behalf for one day when you retire. So these funds remain yours. It comes from your salary, but it's not something that you're able to access before you reach retirement age. Pension provident funds, also something that from a government perspective, they really do obviously want all their citizens to be able to live once they hit retirement age and not become completely out of funds because they just spent all their salary amounts while they work. So that's why you'll get something like a tax benefit if you contribute to pension and provident funds. Because the argument is then that if you get a tax relief or you pay less tax because of the fact that you contribute to these funds, they actually promote, or they would encourage people to contribute to these funds. So you'll see later on when you read through the textbook how the tax part on contributions to pension and provident funds work. Okay, then your medical aid. Medical aid is important for salaries and wages because of the fact that in some cases your employer also takes your medical aid money and they send it to your medical aid. I mean, in reality, you can also contribute to your medical aid on your own. So you can take money every month and send it to Discovery or Momentum. But some cases, your employer just does that for you. Before you get your salary in your bank account, they do the contribution to your medical aid. Then over and above that, as well, we get something called allowances, grouped together because they can be housing, car, travel, entertainment, whatever allowance your employer gives you. Typically, those allowances are paid to you in cash over and above your salary, and you're supposed to use it for something like housing or a car, or if you're traveling for your work. Okay, and then also performance bonus over and above a yearly bonus. So performance bonus would be linked to performance. Let's say you had to reach a specific target or you have to have a specific output. You would be eligible for, if you had good performance, for a bonus. Again, something over and above your salary. Okay, then I want to point you to page 230 of your textbook. There is the difference, they discuss the difference between gross earnings versus taxable earnings. So if you just look at the two terms, gross typically means before any deductions. So the amount that you were contracted for in your employment contract, or the amount that you saw in an advertisement when you applied for your job, that'll be your gross earnings. So all your salaries, bonuses, allowances, everything added together. Where taxable earnings literally means your earnings that are eligible for tax. So not everything that you earn is necessarily, I want to say, taxable. And this is where something like a pension and a provident fund comes in. So the argument is that if you are using some of your gross earnings to contribute to a pension fund or provident fund, that portion that you contributed is not taxable. So that's why, you almost have to exclude that for tax purposes. So there is a difference between gross earnings, which is just everything that you earn before all your deductions, versus the earnings that is actually eligible for tax. Okay, but you can read more on page 230 of your textbook.